Hello. Today we're talking to Agam Jain, who is the CEO of Vector Capital PLC, about various aspects of property finance. So Agam, welcome, and just tell us a little bit to get us going about Vector.
Hello, Paul. Nice to speak to you as always. Vector Capital PLC then, we're a specialist property finance lender. We've been lending for about 20 years now. We provide finance for all aspects of property, whether it's buying, developing, or remortgaging, commercial and residential. And we're quoted on the London Stock Exchange.
So you offer unregulated finance, but what's the difference between unregulated and regulated?
Okay, so the basic difference is that regulated finance is the finance that you take to buy your own home. Okay, so if you're buying a property that you're going to live in as your main residence, then that becomes a regulated loan. Okay, and there's lots of people that provide that sort of finance, all the high street building societies and banks. So the unregulated sector is where you borrow for your business. So maybe you're buying a property for buy to let, you're buying maybe a shop, maybe you're doing an office, a conversion to flats, for example, or you're buying land, or you're buying even a second property. Okay, so all of those then are called unregulated. To add to that, most loans against property are against the first charge, but there are certain lenders, including us, that will also look at second charges, and then that becomes unregulated as well.
And I guess that's because the main high street lenders are no longer interested in that kind of business. They're into the more mainstream traditional.
Or they're very selective, and for whatever reason, they've vacated the space to lenders like us.
Okay. So we hear a lot about bridging finance, particularly in this part of the finance industry. So just tell us exactly what bridging is and when's best to use it.
Okay, so look, bridging is what it says. It's temporary finance that you're taking basically to bridge between you getting a longer term permanent finance. So the types of examples of when you might need bridging is, say you want to buy a property in a rush, or maybe even at an auction, where you've got to complete on a deal quickly. Now, you'd come to somebody like Vector, you'd go to a bridge lender who would be able to get a deal done quickly. Okay, and then after you've done it, you might then want to do some refurbishments and then let the property out, or maybe even then at that stage you can then refinance with a longer term lender at a lower rate. Okay, so it's filling that gap in between going on to a long term loan. So typically bridging could be only for say 3 months or 6 months, but I often find in our experience we end up getting an average of about 14 months, because that's just how long it takes for people to end up refinancing.
And this can be for not just residential properties, you can do commercial as well.
Yep, so a lot of demand nowadays for people to buy maybe say commercial properties, and the fashion at the moment is they're all buying them to convert them to residential. You can have mixed-use properties with a retail downstairs and some flats upstairs, and also for genuine commercial purposes. You might want to buy a property to run it as a business, and you may struggle to find finance for that, and so you'd come to a specialist lender like Vector for that.
So in actual fact, over the last 18 months, the events of the last year and a half mean that people like yourselves are going to be in more demand, simply because people are going to want to do change of use. They want to, bring in the residential aspect into some of these commercial units. So that suggests that you're going to be even more of interest.
That's right, because at least we'll look at the proposition. And we'll take a pragmatic view on if we think it's viable for the borrower as well as us. Then we'll try and make it happen. Whereas a lot of the traditional lenders have basically just left the space. They don't want to get involved.
So we talked about residential and commercial, talked about bridging finance, but you can also help with land and development for property developers, essentially.
Okay, so when we talk about land and development, it becomes quite a specialist area, and the number of companies that can lend against land and development reduces dramatically. So, why is it more complicated? Okay, so you're a builder and you've seen a piece of land that you like and you want to buy it. So, in order to get finance for that, you'll need to have a lender that will understand all the implications. Okay, so one of the things that the lender has to be able to understand is that you'll have to get planning permission, and then you'll have to have architects draw up plans, and you'll have your GDVs. By GDVs, I mean what the developed value of the property that you intend to build will be. Okay. Then there's matters like S106, which are contributions to your local council. We'll have to get involved with checking your architect's appointment, your structural engineer's appointment, and the lender will require sites of the building contract, indemnities, and collateral warranties. So it's quite an involved area. And typically, the way lending against land and development works is that the lender gives you tranches at various stages of the cycle. So there'll be a tranche for buying the land, then there'll be a tranche for doing stage one of the building works, and at each stage, the lender would send in a quantity surveyor to see the value addition and the costs incurred, and then release tranches against that. And then again, at the end of the development, when it's developed, then the builder then has the option then to refinance with a traditional lender, or maybe when he decides not to sell the properties but maybe rent them out, then again he has that chance. So this cycle could be for as long as 2 years from buying the land to finishing the development, and that's where Vector is there then to finance and hold your hand to completion.
And clearly, anyone working in this space looking to take on a project like that, they're going to have their own legal and professional advice with them, aren't they?
Yeah, all borrowers have to have legal representation. We never deal with the borrower directly. It's always solicitor to solicitor, simply because it is quite a complex area, and both parties need to protect their interests. And in the industry, is just standard practice. The borrower has to be represented.
So Vector Capital is an asset-based lender. Just explain what that means and how that can help with business finance.
Okay, so for example, a typical bank would be looking at your income stream. Maybe even looks at your CVs, and all these matters are very, very important before they'll agree to give you a decision on a loan. Whereas asset-based lenders are looking at the value of the security that you're going to provide. Okay, so that gives you, as the borrower, certain flexibilities, because, for example, you can borrow from a lender to do a specific property purchase or to do a specific development. But if you have a property that's unencumbered and you can give that as security, then you've also got the option to take a loan against that to use for starting a new project, or increasing your business cash flow, or for any other business process that you want it for. And a lot of times people then use a lender like us to refinance from maybe another lender, which has got certain restrictions that you want to be freed from.
And what are the loan requirements for any of these particular types of projects?
Right, so a typical process would involve the lender would have to, first of all, do AML checks on you. Now, AML checks means anti-money laundering checks, so that's quite a heavy requirement nowadays. So we'd have to check the identity and sources of funds. We would then have a look at the value of the security that you're offering. We'd have to get a independent valuation from a RICS surveyor. By RICS, I mean somebody that's registered with the Royal Institute of Chartered Surveyors. And then against that, we would say we can go, maybe make an offer of 70% or 75% against the value of that asset. Often borrowers would set up a SPV, that's a special purpose vehicle, and it's a limited company where they would manage that specific project through. Um, and it would have no other assets apart from the property that they're going to purchase or the project that they're doing. So we would have maybe take a debenture over that and require the director's guarantees. Once the decision in principle has been made and the borrower has decided he wants to proceed, then the two sets of solicitors would engage in extensive sort of due diligence via each other before we get to completion. Just a comment on the time of completion. Lenders like us, if everything's in place, can often complete within 2 weeks. Okay. If, for example, there's certain documents are missing or they need to be got, then the process can be extended. But in theory, there's no reason why it can't be done that fast.
And how is Vector funded? You mentioned it's a PLC on the stock exchange. So how is the company funded?
Basically, we're funded by shareholders' funds. So that's the funds of all the people that have invested in the stock market in the company. And then against that, we have substantial debt facilities from wholesale banking lines. So we're able to then do sort of projects of any size and quantity that we want.
And why should people choose Vector? What kind of people would come to you for your assistance?
Okay, usually borrowers are recommended to us via their brokers. And the reason brokers sort of come to us is speed of response. A broker would speak with one of our business development managers, and he would get a decision, an outline decision in principle on the same day. Okay, so that means that the borrower knows if what he wants to do is viable or not. Okay, and then obviously we expect the borrower and the broker to have got alternative offers from other lenders, and then they can compare the costs and fees and the rates and the speed and all the factors that a borrower should normally be looking out for.
And what makes Vector different?
We've got quite an enthusiastic team, and we've got a lot of experience, and we get our satisfaction when we get a difficult case that other people just couldn't manage to get done, and we find a solution and try and get it done.
Agam Jain, CEO of Vector Capital PLC, thank you very much.
Thank you.